Hi everyone, hope you're all doing well, and today we're going to talk about TTCF stock, or Tattooed Chef, and we're going to be talking about this stock that is on a bit of a dip at the moment, and I think this is an opportunity that you do not want to miss, and at these current prices it's definitely worth considering if you want to buy or invest into this company. Now this is a company that I've owned for probably about 6 months. I started buying this company quite a while ago when it was actually still a SPAC stock. My average at the moment is sitting somewhere around about $17, so I'm not down huge, but yesterday was the first time that I have been down on this company for quite a few months. And I haven't talked about this company for a few reasons recently, because I think that when stocks go up, I tend to not talk about them because that's it, leave it there, let's go find some more opportunities to make money. And I just kind of left it, and I was looking for other stocks that are going down, and those are the ones that we talk about because those are the next companies to make money on. But this company has kind of moved in the opposite direction because their stock price has come down. So this is now maybe another opportunity where you can get it started investing in this company, or average into your position more when you were kind of like, oh, I wish I bought more a few months ago. And that's what I'm kind of thinking right now, looking at this company. Now it's back down in the $16 range. And as well with Tattoo Chef, there hasn't been that much news out about this company recently. So if there's no news to talk about, I can't really make a video. But recently, over the last few weeks really, there has been a few bits of news that have come out about this company that I can add into this video and share with you guys as well. So if you could smash the like button if you are new, subscribe. If you do want to join my Patreon where we put exclusive content on there, make sure you join that through the link in the description. And if you do want to start investing, there's some links to some brokers in the description as well, where you could actually buy some shares in Tattooed Chef if you are interested in this one after the video. But Tattooed Chef is one that I've been in for a little bit now. It has definitely got a lot of YouTube backing on it. You know, when I first started buying this company, I hardly saw this company. I don't even think I ever saw someone mention Tattooed Chef on the YouTube scene, but it's definitely a well talked about stock on the YouTube scene now, and that's probably one reason as well why I don't cover it that much, is that there's so many other videos out there now. I don't think it needs me like to cover it that much, but it's definitely got a lot of backing on the YouTube side of it, and yeah, that's maybe one of the reasons why I haven't started talking about it as much as what I used to do. But the company is now down at $16. And it's actually down 35% in 1 month. That's quite a bit of a drop in a 1 month period. To lose 35% of your share price is a lot. And realistically, there's not much that's changed with this company. You know, you'd think a 35% drop would be something deserved, like some panic really. And I'll talk about one thing that's kind of developed over the last kind of few weeks, or definitely over the weekend, is the CFO leaving. That might be one thing that might cause a little bit of a drop in the share price. But if 35% drop, you'd think something's really changed with this company, or you would start thinking, okay, they've had earnings and the earnings weren't amazing, but it hasn't had earnings for a while. And last time it had earnings, the numbers they actually put in were pretty decent as well. So yeah, really looking at this and thinking there's something changed with this company, but it hasn't. And the only thing that kind of just ties in with it is this whole kind of higher growth stocks that have been selling off recently, and maybe this one has just kind of got caught in there. And with this rotation, is this one of those companies that you might look at and think this is a good buying opportunity? And when you start thinking 2 to 5 years down the line, I could double my money, triple my money on this one, and that's what I'm thinking of in this one here. Is it's a good opportunity to go buy this at this valuation, because I think it's undervalued right now, and even longer term, I think this company has loads of potential, which we'll go through today. So, first of all, what's the company and what's the industry? First of all, we're picking up a growing industry, which is the key thing. I always say, you know, you want to be buying companies that are in growing industries, because you're actually going to have more and more customers come into this area. These guys are focused on plant-based food, and at the moment this is growing because of the change from eating meat, and as well as eating meat, people are living healthier and healthy lifestyles. So them two combinations are doing very well for this company. Bit different to Beyond Meat, which focuses more on like food services side of it, and also they're actually just focused on, you know, actual meat alternatives, making fake meat. Whereas Tattoo Chef is starting to move into that sort of category, but they are more focused on vegetarian offerings and a little bit more on frozen food. But nevertheless, it is in a massive growing category, which is really good. And just on the branding side of it as well, I do think the branding on this product is pretty fantastic. Now, we're just going to go, once again, a bit like a skills video, we're just going to strip this completely down back to basics, and we're just going to focus on the management team, and if we've got a good management team here. Now, the management team here, the main founder, the CEO, is Sam Galletti. Now, some of you guys might know this guy, some of you guys might not know this guy. If you know this guy and you might have listened to some interviews with him, whenever I listen to interviews with him, is one of the kind of people that I look at and listen to and go, wow, this guy is great. He knows what he's doing. I think he's got like 35 years of experience in this industry, which is great. And obviously, Tattooed Chef is something that he's been involved in for a very long time. Previously, before they even made the Tattooed Chef branded products and sold the previous company under private labels, and now we created the brand Tattooed Chef. It's definitely helped sales and is the next step up. But even before that, he had managed his company very well, been very well involved in the food industry, and obviously the creation of Tattooed Chef and the branded sales that we've had now are absolutely fantastic. And then as well as just having Sam Galletti as well, who's I think is really good, and when you listen to him, he's fantastic. His actual daughter as well, Sarah Galletti, she manages a lot of like the product side of it and developing the products, which have very high reviews as well. And the amount of products that she's been able to pull out over the course of the last kind of 1-2 years have been fantastic. And then when you look at what she's going to do as well, ramping up the products, I think between them both, we've got a very good management team who basically have been, them two have solely basically managed this company for the last few years. It's only recently that they've actually took it a bit more serious, realised the potential of becoming a public stock, the potential of becoming more of a branded product. And these guys have pretty much done it on their own for so many years, and it's only now they've actually got a team behind them, and I think that's very significant when you look at what they've been able to achieve with just them two kind of there. So yeah, I think when we look at the management team, I'm a big fan of Sam Galletti. If you can look at this company after this, I'll definitely go check out some interviews with him. I think there's one that he did with Roth Capital, I believe it was. I think it's about an hour long. It's somewhere on YouTube. That's one that's definitely worth looking into. Now, what I say previously about Sam Galletti is that how has he done with this company previously? You look at the company and what it's done previously, this company has been growing at massive amounts of rate. Once again, the growth might slightly slow down, but it's slowing down to, like 50% revenue growth, which is still fantastic. But previously to that, Sam Galletti has grown this company at 80, 90, 100% rates, which is absolutely fantastic. And what they've done previously is they've kind of managed this under like the private labels, and now they've got obviously the Tattooed Chef brand in there, and that is the game changer. And under the Tattooed Chef brand deal, one of the biggest achievements and the big game plan of how you can see this company is easily going to do well is one of the first major deals they announced. So obviously they work under Sam's Club, Costco, but one of the big game changing deals for me was this one, which is Walmart. Walmart is a massive deal, and the thing with this Walmart deal that they've had previously, which has definitely helped the revenue over the last kind of 12 months, is the Walmart deal was the game changer, because the success that you've seen on the Walmart deal is the confidence what you need to hold this company. Because you look at what's happened in Walmart have put this product into the stores. After they've put the products into the stores, what they've done is they've expanded it to more and more stores around the US. Now, if the product was a bad product, a product that wasn't selling, they probably wouldn't expand it as quick as what they have done. But they have, because the product is selling very well for them. And the other key point as well about this Walmart deal, and they did a massive case study, I think it was on the Investor Day presentation. I might be showing you right now, I don't know. It depends if I found it or not. But if I found it and I'm showing you right now, they did a case study and it shows how successful it's been. And also the thing as well about it's done that well that they're expanding it to stores. They've also expanded the amount of products they have from Tattooed Chef in the Walmart stores. So you think about that, they've gone, it's selling that well, we're going to actually put it in a lot more stores. And as well as that, we're going to actually give you more shelf space and more products to sell through Walmart. Now, Walmart would not go, oh, that Tattooed Chef product's not doing well, but we're going to give it more shelf space. They wouldn't, because they have to think about what is selling, what isn't selling. And another product that hasn't been selling well would have been removed, so then Walmart give them more shelf space. And that's the big sign of confidence that Walmart, one of the biggest deals that you could have because of the amount of stores they have, is putting them in more stores and more shelf space. That is the dream statement of that is a great product. And that's what's helped revenue over the last kind of 12 months is this Walmart deal. And the great thing with that Walmart deal as well is from Tattoo Chef point of view now is that, to get into these major chains, it can be quite hard at first to get into them. But all they need to do now is any other chains that they go into, we'll talk about Target in a few minutes, but 7 and 11, Safeways, Kroger, all they need to do now is go to them stores and show them what's happening at Walmart and go, look, we've got a deal with Walmart. When we've got this deal with Walmart, they've put it into more stores because it's selling well. They've expanded the amount of products we're selling because it's selling that well. And all the other the superstores that are out there, of course they're going to start looking at this, what's happened with the Walmart side of it, and go, we've got to have this product in here because it's a great product. It's selling. Clearly, look at Walmart. And what we'll see, in my opinion, in the next 24 months is the ramp up from not just having Walmart deal. We'll talk about Target in a second because that's just getting started, but we will see more names start selling this product. And in fact, in the recent earnings, there was a few names drops that have started coming on and selling this product. And that will happen as well, even more. There'll be more and more names coming on and selling this product. And if you're in more stores and your product's going to sell, for me, Tattoo Chef is one of the most easy high conviction stocks because you only have to look at how successful the Walmart deal's been to understand the product sells. And you can see when the product sells in the more stores, you've seen what the revenue does. And it's just, for me, this is just one of the easiest high conviction stocks because you go, there you go. It works, the product's good, it sells, it's got good reviews. Walmart are giving it more shelf space and more stores. It must be a great product. And you even look at Target now, which we'll talk about in a second, but it's one of the easiest stocks to go, this is going to do well in the next few years. So let's go to the future. I've got a few things to go through on this one, so I won't try to spend too long on it. But where's the first one? Target, here we go. Let's talk about this one because I was nearly talking about it on the last one. Target. So Target is one of the new stores they don't have many products in there. I think at the moment they only have 3 products in Target, but what we've seen is the Target sales are doing very well, and this is Walmart again at early stages. Target have gone, okay, we need to get this in every store, and as well as getting in every store, Target have gone, it's selling so well, we need more of your products in here, and that's what they'll do. So Target are going to have more and more products and in more and more stores. It's only going to help revenue down the line. Same again. Tattoo Chef are now going to go, look, we've had a Walmart deal that's doing well, we have Target deal that's doing well. You're going to go to Kroger and go, well, come on, look at Target, look at Walmart, look how well it's doing. And what's going to happen, there's just going to be more and more stores, the product will sell, more and more revenue comes in. So there'll be a lot of expansion of new stores in the next 24 months, as well as the massive Target deal that's also going very well. Products. At the moment, Tattoo Chef have a decent amount of products, but this year, Sarah's going to be absolutely ramping out the amount of products they have. More and more products can fit different sort of audiences, as well as more products for them to offer to the online sales, because they've started doing online sales now, which is somewhere on here, online. They've actually started doing online sales, direct sales, and direct sales as well will give you the ability to have better margins as well. So online sales are going to ramp up at the same time. More and more products, more for your online sales, more option for stores to take on, and that's going to be massively developing in the coming few months. And the revenue and the profit, historically this company's done amazing amounts of revenue, it's done amazing amounts of profit, and going forward it's going to do amazing revenue, and you can see the game plan straight off. And the great thing about this company is, when I talked about Skills yesterday, Skills is a company that is still very early stages, lots of promotion. Revenue is absolutely great, and you have to really focus on the revenue there on that side of the company. But the thing is with this company is that you're actually getting really good revenue growth, but it's actually pulling in a profit. And profit might be not the main thing as it ramps up revenue, as it has to ramp up production to help its sales. But this isn't a company that you have to worry about it burning through the money, because it's very much near profit. It has pulled out profitable years. you know what, in the next few years it might dip as it ramps up production, because trying to get your product into all the products you're going to sell through Walmart and through Target, you'll need to ramp up your facilities, and it might hurt a little bit in the short term, but it's nothing that you have to worry that it's going to burn through cash. And the thing is that more products it sells, eventually it will start ramping up profitability, which it has done already. But I'm just saying that might, don't focus too much on that, because when you're a company at this size, the big thing you want to do is focus on ramping up the product. But it's ramping up the product still, and it's still pulling in pretty decent profit as well. And as well as that, it has a very solid balance sheet. So you don't even have to worry about profitability on this one. You don't have to worry about the balance sheet on this one. It's quite amazing what they do there. So that's another thing that you've got. Food service. It did hint at going into the food service market. We've seen what advantages that can have. We'll see where that goes. Could be another little thing that they move into. Outside of the US, this company is only making the revenue it currently does have from the US side of it. That's not even talking about, Costco kind of helps them with a bit of international growth. But if they start moving outside the US, they've got a factory in the US, they've got a factory in Italy. What happens if Italy just starts shipping all their kind of products that they produce into the EU, and they expand into the EU, and they start signing deals with Costco, Aldi, everyone like that. So this company is still really early stages. It's in basically like one country mainly. So there's massive international growth still to come on this one. Ads, they've actually started advertising. What Tattooed Chef achieved previously with the amount of growth they've had has all been from zero ads. Now, one little negative I do have is maybe the ads could have been slightly better. Let's be honest. If you have seen the ads could have been slightly better. But anyway, they've had zero marketing. And if they do start marketing the product, hopefully that does help the sales. They've got a balance sheet now to put a lot of cash into it. Advertising is only going to help the brand get out there anyway. Can question whether or not the ads so far could have been slightly better. But nevertheless, we are going to have some bit of advertising now, which will help it. And I don't know why, but I've got ads twice there. But overall, you can see here, there's a lot of benefits to go through this company. And like I said, I think when a lot of these start coming in place and the new stores come in place, and the benefits that you've seen from the Walmart and Target deal, it's going to be absolutely crazy. Now, there has been probably two things that that have kind of made investors a little bit nervous. I think it's more because of the US growth rotation that's going on, or the hyper growth stocks that are being rotating out of. But the two recent news that have come out is the CFO has left and insider selling, and mainly by insider selling, I mean Sam Galletti. Now, the CFO for me the CFO does have a tricky job. It's definitely hard managing all the finances of the company, especially a company that's growing at this rate, that has so much going on at the moment, that has gone through a SPAC situation as well. The CFO is an important job to make sure everything is run correctly financially. You can look at other companies where the CFO has done a bad job, and yeah, it's a tricky job, and it is important to a company, but a CFO isn't going to make that much difference. There's many people that could come in and be a CFO. There's not many people that could come in and do what Sam Galletti's done, what Sarah Galletti's done. This is the more important role. People will not invest because they have a certain CFO in the company. People will buy a company, and the main thing they will look at when they buy a company on the management side of it is who is the founder and who is the CEO. And those will be the people that get criticised, and those are the people that will make and break a company. The CFO, which I think is Chuck, if I got that right off memory, I'm so impressed. Anyway, I think the CFO was Chuck, and I've heard him on conference calls before. And the big thing is Sam Galletti here, he's done all this, he's done it from scratch, he's built up this company. Chuck, I believe, has only been in the company under a year. And he hasn't built this company, he hasn't done all these fantastic deals. He hasn't developed the company to where it is right now. The guy behind this is him. And that is the most important person. Come back to me if something happens there, come back to me, because that's a game changer. This here, a CFO that's been in the role for a year, isn't important. It makes zero difference to me. This is the guy that we focus on. And it probably even Sarah Galletti as well. This here is replaceable. Not saying it isn't important, because it is still an important role in a company. But realistically, someone that's been in a year and someone that can be replaced quite easy, that's not important. This is what the company relies on. This guy right here, and I think as well, to be honest with you, I think I've seen or heard about when I've listened to conference calls, I've had Chuck talking them, and I've always said, like, my one biggest criticism of Tattoo Chef was, the most critical I've ever been of Tattoo Chef was on their last earnings call, because in my opinion, Tattoo Chef in the last earnings call didn't hype up their company enough. I listened to the earnings call and I was like, you guys have done a pretty good quarter, but you're just making it sound like it was like, yeah, we did this and we did this. Like, make it sound like amazing. The big difference to me was Tattoo Chef on I listened to Tattoo Chef on Investors Day, and on Investors Day, I think Sam Glatter proper went into it. It sounded amazing. There was really good information there. And the recent conference call wasn't amazing. And one of the people I think that might have been the cause for that was maybe Chuck, the CFO. CFOs are never sound that too amazing on conference calls, but at least try and make it, exaggerate the big points, exaggerate the really positive points on the company a little bit more. And yeah, overall, what I'm trying to say anyway is that this isn't huge to me anyway. So I don't worry about that. All the key point is here. Now, obviously, there's some insider selling. So the news came out that Sam Glatter had sold some shares as well. I think there was a reason for this, but I can't remember the reason off the top of my head. Something to do with some sort of debt or something. But I'm going to make a complete video about like insider selling and talk about what things that would be positive with insiders buying and what things you'd look out for, and when insider selling is a negative thing. But I don't want to talk about it too much today. But basically, if I was to sum this up, is that don't get worried about insider selling. There's always going to be people that sell shares. Let's not forget Sam Glatter. For Sam Glatter right now, is that even if he was he was forced that he had to sell these shares for some reason, insiders are always going to sell shares because they are, especially when they come onto the stock market, because they've put a lot of hard work into the company. They've put a lot of investment into the company, and if they can sell shares like instantly, they will do it. Don't think companies came onto the stock market for the good of other people to come invest into the company. Sure, they might have done it from a point of view of like brand awareness that might help them a bit easier to raise capital. But one of the big things I'll be thinking is that I can release my equity with a snap of my fingers. And that's amazing for them. If they've been in a company and built it up for so many years, that's an amazing ability. Just like how we are as investors, we would have put hard work into companies, looking into companies, investing in them, and we would go sell them when we made money. Everyone in this industry has a business mind. Very much like a lot of these management teams, if they've invested into it, they're smart guys. They put a lot of hard work into it. They want rewards for their investments. Just like me and you can't blame someone else because they're in a company you're holding and they want to get some money back on that. We would do exactly the same thing, and that's what's going to happen, especially on a company that's just come public. One of the main reasons they will do that is because they want some money. They want to take, have a little bit of rewards. It's a total different situation where I think Sam Glatter still holds like 35% of the company or something. It's a totally different situation if Sam Glatter goes from 35% of holding in the company down to a 10% holding. Then you're like, and it's over a very short period, then you're like, what is going on? That's a different situation. But when you're still holding 35% of your profit, don't blame the guy for selling some shares. He's put a lot of investment in here. He's taking his rewards. And yeah, I have no problems. I would say that Sam Glatter could sell another 5% of his company and I still won't be worried. Come back to me when it gets a lot lower than that. He still holds a massive stake anyway. But yeah, for me, I think there was another reason behind it. But even so, even if he wanted to treat himself and take another 5% off the table, I would not panic. He still holds a good offering. He's still the founder. He still has a big stake in the company. Do not worry about it. And that's a video that I'm actually going to make in a few days' time anyway, so I don't want to talk about it too much now. But just on the valuation point of view, this company is now trading at like a price to sales ratio of 10 after the revenue that it's put in this year. Very cheap for a growth company. If you look at something like a Celsius, for example, healthy beverage, obviously we talk about healthy food, healthy beverage company, I think that's like a 30 price sales ratio. And if it does put in the numbers it's supposed to do in 2021, it's going to be trading at a price sales ratio of 5, which is just crazy cheap. So yeah, we'll see exactly what happens on there. The valuation is just cheap, especially when you compare it to something like another kind of company there. Celsius is like a 30 price sales ratio. I think even Beyond Meat, and Beyond Meat's on a massive sell off. Beyond Meat is like a 20 something price sales ratio. So it's half the value of that. Don't get me wrong, I think the total different kind of companies with where they see the company going. And certainly one will rebound a lot more in the next few months when this food service comes back. But just give you a kind of suggestion, a company that's growing at this sort of rate, at this price sales ratio, it is pretty cheap. And one thing that I kind of run off is, if it is a profitable company, and this might not happen, but if they can grow profit and get to like a 30 million profit, which could easily happen with this company, you talk about a company that's going to be at like a P of like 42, which is very cheap for a growth company once again. So yeah, I think from the valuation point of view, it's dirt cheap, and if they can deliver all these things, and you can see that it's already got a track history of being successful with the contracts it does have, the company for me is really cheap at these valuations. And I can easily see, I think in my opinion, this company should be already at like a $20 stock to a $30 stock. But I think the difference is over the next kind of 2 to 5 years, when it ramps up more of these like Walmart, Target deals, and goes into even more stores, and then if we start talking, it goes internationally. It's a totally different ball game, and that will start kicking in the revenue, the profit. The Wall Street will wake up to it, because it's quite a new company really. It's a small company. Wall Street don't really know about this one. The only people that can know about this one is probably the guys that watch YouTube. That's probably where it's the most well-known kind of investment at the moment, is on the YouTube scene, I guess. But for me, when I look at this company at $16, the thing is, I can easily see this 2xing. It should already be like a $20, $30 stock for me. But when you start running the game plan down the line, you start thinking about where this can go. And this is a company that I at least expect a 2x from. But realistically, in my head, when I think further down the line, I think I could make up to 5x on this opportunity right now at these prices. And that's a pretty decent upside, and you can easily see that it can achieve that. So anyway, that's the video for today, talking about Tattoo Chef. I hadn't talked about it for a while, and there's been a bit of news, and also it's been on a bit of a dip. So I thought, let's cover it. I just really released it on Thursday, so we could do Tattoo Chef Thursdays again. But hey, by then, something else might have happened with the news, or this information might be outdated, or the stock might have gone up by then. And I thought I'd do it today anyway. But hope you enjoyed it. As always, if you can smash the like button, if you're new, subscribe. If you found this video useful, that'd be absolutely amazing. And I'll see you on the next video.